Investing wisely demands thorough contemplation of both risk and potential returns. It involves a strategic allocation of funds, often presenting a crucial decision between individual stocks and exchange-traded funds, ETFs. Opting for ETFs over individual stocks can significantly mitigate risk exposure. By committing to investing $1 per day in an ETF, one not only ensures diversification across various assets, but also minimizes vulnerability to the inherent volatility associated with individual stocks. While individual stocks may tantalize with the promise of higher returns, they also carry augmented risk levels due to their susceptibility to company-specific factors. Conversely, placing trust in the broader market, as represented by ETFs, fosters a sense of security and stability. Such a decision underscores a prudent approach to investment, harmonizing the pursuit of growth with the imperative need for protection against downside risk. In essence, the choice to embrace the safety and diversification offered by ETFs over individual stocks epitomizes a deliberate and calculated investment strategy aimed at fostering steady and sustained growth over time. It reflects a recognition of the importance of risk management and the cultivation of a resilient investment portfolio in the dynamic landscape of financial markets. For that reason, I'm investing $1 per day in the S&P 500. This decision aligns with the strategic approach of leveraging ETFs to mitigate risk while capitalizing on the broader market dynamics. If you enjoy the video and find the content engaging, we're thrilled that you like what you see. If the information provided resonates with you and you're eager for more, please consider subscribing to the channel and clicking the notification bell to stay updated with our latest releases. Your support means a lot to us, and we're excited to have you as part of our community. Thank you for tuning in.